Will home prices across Ohio crash in 2024 or will they continue to go up? That's a question that you need to know the answer to as a home buyer or a real estate investor. And right now, the data is showing that home prices in Ohio have actually gone up by 5.1% over the last year. And one of the reasons that home prices in Ohio have kept growing even while the broader market is in a downturn is because prices are affordable in Ohio. Because the typical home value of a standard house in Ohio is $216,000. That is well below the US average, and it's the ninth cheapest home value in America. And so those more affordable prices are allowing people to still afford homes even at 7% mortgage rates. But of course, there's big differences across the state of Ohio in terms of how expensive or affordable homes are. If we zoom in on this metro map of the Ohio housing market, we can see Columbus has the highest home prices, typical value of around $300,000, while Cincinnati has the second most expensive home prices. Cleveland is in third by a long shot at $214,000. Then we have a lot of smaller metros in Ohio like Toledo and Marion and Wheeling and Akron, where the prices are just like much cheaper. And really the metric to understand the affordability and prices here is the home value to income ratio. If we switch it to home value to income ratio, we can see we have a lot of areas in Ohio where home prices are less than 3 times the median household income, which is again fairly cheap. However, prices in Ohio are affordable for a reason, everyone. It is Ohio after all, and this state which has struggled economically for the last 3 decades, all the outsourcing of jobs and of the manufacturing sector in America that occurred in the 80s, 90s, and 2000s, that hit Ohio very, very hard. Additionally, lots of people left the state of Ohio for a really long time, which caused depressed home values. However, something interesting is now happening as we enter 2024, and that's that Ohio is actually starting to see people move in. Why don't you take a look at this, folks? This map measures the migration levels into all the different states in America in the most recent year, which is actually 2022. According to the U.S. Census Bureau, 2023 data is about to come out, but take a look at this. Ohio is here, plus 15,000 positive migration. You can see Pennsylvania lost a lot of people, New York lost a lot of people, Illinois lost a lot of people, but Ohio gained. And what you can see is that this was actually the best performing year for migration in Ohio in the last 3 decades, which is amazing. So there seems to be a shift occurring where, basically from like 1993 all the way to 2012, Ohio just like hemorrhaged people, lost people every single year. Then it started to break even. There was a bit of a dip during the pandemic. Now it's hitting record levels of inbound migration into Ohio, which, to be clear, is not like a ton of people moving in. It's not like Ohio is receiving nearly the same amount of people as Texas or Florida, but it's actually positively growing now due to inbound migration, which is good for the state. It's going to probably be good for the housing market in the long run to have more people moving in. And where are these people moving to? Well, Columbus is the big one. Columbus had plus 10,000 positive migration. Basically 2/3 of Ohio's migration went to Columbus. The other 1/3 went to Cincinnati. So Columbus and Cincinnati are like the 2 metros that are leading the growth charge. Everywhere else is kind of flat or slightly negative. Interestingly, Akron also had some positive growth, but Columbus and Cincinnati are the 2 big metros that are adding people, which theoretically is something that could cause home prices to continue to go up over the long term if Ohio and these metros can continue to add people. However, there is a problem in Ohio's housing market right now, and it's the fact that even though prices are still relatively affordable and that there's people moving in, the prices are still a lot more expensive than they used to be. Home prices in Ohio went up by a lot during the pandemic, faster than the rate of growth in local incomes. And that is something which has tipped the Ohio housing market into what I call overvaluation. Home prices went up a lot faster than incomes, so the relationship of home prices to incomes is now detached from its long-term historical norms. And this is very important to understand as a home buyer or investor, the overvaluation levels in your market. So let me show you exactly what I'm talking about here with Ohio. So on this map, we're looking at the home value to income ratio across all the states in America. And what you could see here is that Ohio's home value to income ratio is 3.2. A typical home value of $216,000 divided by a median income of $68,000. That's pretty cheap. That's why Ohio is showing up in blue, whereas like if you go to the West Coast, California, the home value to income ratio is almost 8x. So like these are the expensive parts of America, the Midwest is cheaper, but really with Ohio, what is maybe a little concerning is that this home value to income ratio of 3.2 is now above the long-term average average of 2.7. So if you go back the last 20 years, on average, home prices in Ohio sold for 2.7 times median income. Now it's 3.2. So home prices in Ohio are about 20% overvalued right now compared to their long-term norms. And so, you can see a typical home value today of $216,000, but the fair home value based on incomes is $180,000. So this is something that suggests potentially home prices in Ohio could be going down over the next couple of years. Maybe it'll be a correction of sorts to get this overvaluation level back down to a more normal long-term rate. However, for that to happen, for prices in Ohio to go down and for the overvaluation to correct itself, we'll need to see more inventory of homes for sale hit the market. Because this is kind of the weird thing we got going on in Ohio and a lot of other states, is that the prices have gone up. They're more expensive than they used to be. However, in many cases, they're still going up because of a lack of inventory of homes for sale. There's just not a lot of listings on the market in a state like Ohio. As you can see right now, there's 16,000 homes for sale in Ohio. Everyone, 16,000 homes for sale. Now, what we want to do is look at how this compares to the history. And you can see before the pandemic, there was 30,000 homes for sale in Ohio, and the long run average at this point is 23,000. And so 16,000 homes for sale below the long-term norm of inventory, and it's ultimately this shortage of inventory, which is continuing to put upward pressure on home prices. And if we zoom in here on all the different metros, we can see there's some differences in different metro areas. And one way to identify these differences is to look at a metric called sale inventory deficit. Now, this is a data point that's on Reventure app, which is the application I'm using in this video to show you guys this data. You can actually access all of the data in this video for yourself on the state of Ohio, the different metros and different neighborhoods and zip codes. You can access that data by going to www.reventure.app. But wait, don't go there yet. Let's dig into it a little bit more so you understand how to use it as a home buyer investor to make a better decision. So sale inventory deficit, what this is showing is how high or low inventory is compared to long-term norms. So in Columbus, inventory is down 14% from the long-term average, which is actually the lowest deficit in Ohio. So inventory is coming back most in Columbus, but is not quite there yet. We're still 14% below long-term norms. However, if we go to Cincinnati, you can see inventory is 28% below the long-term norms. If we go to Toledo, inventory is 35%. And so the way to think about this, folks, is that the more that the inventory is at a deficit compared to the long-term average, the more work that needs to be done to bring inventory on the market and push prices down. And just to give you guys a comparison here, like you can see inventory is down in Ohio, but if we were to go to like a state like Texas, you can see the inventory in Texas is way up compared to long-term norms. So if you're a buyer in Ohio, you want to see something like what's going on in Texas right now, where the inventory is above the long-term norms. However, we're not there yet. In Ohio, inventory is still low. And one of the reasons that inventory is low, there's not a lot of home and apartment development across the state of Ohio in general, with the building permit level lagging way behind a lot of other states. Is on Reventure app, we have a new data point called building permit percentage. And what this does, it takes the number of building permits and divides it by the population. Then you can see builders in Ohio over the last 12 months have pulled 27,000 permits for new homes and apartments. 27,000, that compares to like 93,000 in North Carolina, or 66,000 in Georgia, or 190,000 in Florida, or 44,000 in Tennessee. So you can see Ohio is just not building as many homes as some of these other states. And you can see this building permit percentage is basically way down from the peaks that occurred during the last bubble in the mid-2000s. Ohio was building like 55,000 new housing units a year. Now they're building 27,000. And so the building permits really never recovered from that last housing crash. The builders just never went back into Ohio in the same way. Now, if we zoom in, we could see that there are some differences. Like Columbus definitely has a large share of the permits, 12,000 permits in Columbus compared to only 3,000 in Cleveland. So there's a lot more building going on in Columbus. Maybe they're building certainly in specific areas across the Columbus metro. But in general, Ohio is a state that just doesn't build very much. And so to see more inventory on the market, we're going to need to start to see distress. Like, unfortunately, to see kind of more new listings and more homes for sale, they're going to need to come from existing owners in Ohio. There's not a lot of investors there. There's not a lot of second homes. So it's going to need to come from people who live in the homes, unfortunately. So, we'll need to see an increase in mortgage defaults, probably, an increase in foreclosures for there to be a big uptick in inventory and new listings in Ohio, which could definitely happen, folks. Ohio historically is a place where there have been a lot lot of mortgage defaults and foreclosures. So that's something to watch out for that could occur at some point in 2024. But really, folks, if you're a buyer investor looking in Ohio in 2024, one thing I want to make sure you understand is that it's not enough to know the data on your state and your metro. You got to dig into what's going on in your zip code and your neighborhood, because there's vast differences in local housing markets. Like you could be in Columbus or Cincinnati or Cleveland, and like literally 3 miles away from where you are, home prices could be going down while they're still going up in your zip code, or vice versa. And so if you're a buyer and investor who wants to make an educated decision, you have to track the data at the zip code level. Because if I zoom in here on Columbus and look at the different zip codes, we can immediately see there's big differences in just the general home values and how expensive areas are, right? The suburbs to the northwest, like in Dublin, are expensive, whereas like some of these more gentrifying locations to the south, to the west of the urban area are much cheaper. And you can see these differences extend to appreciation. You know, home values are going down year over year in the short north. They're still going up if you go east towards Bexley and Whitehall. So big differences in home values, big difference in appreciation, big differences also in inventory. If we go to that sale inventory deficit figure, we can see if we zoom out that, you know, inventory is way down in a lot of these nice suburbs like Dublin and Hilliard. It's way down in Grandview. But if we go to the southeast, inventory is actually up in some of these more, let's call them rural suburban zip codes out to the southeast in Columbus. So if inventory is up, more likely that prices will drop. If inventory is still really low, more likely that prices will continue to go up. So important you understand these inventory trends in your zip code. And if we head on over to Cincinnati, we can see there's actually even more variation in inventory. We have these pockets where inventory is up 41% in one zip code here near over the Rhine, but in another zip code, it's down 47%. You know, another metric you'd probably want to check out is the percentage of sellers cutting the price. Big differences in the share of sellers cutting the price in different areas. You could see in this zip code 45211, the price cut percentage was really low during the middle of the pandemic. No one was cutting the price. Now 27% of sellers are cutting the price, well above the long-term average of 20%, which indicates prices could be going down in the future. And really, to me, if you want to understand like the direction of prices in the next year, you know, if you're a buyer and you want to know like, are prices going to, you know, go up or go down in my market, I would really look at 3 specific data points. One is the sale inventory deficit. You know, how much inventory is there compared to long-term norms? Another is that price cut percentage. How are sellers cutting the price compared to long-term norms? And then the third thing I would take a look at is the days on the market. Because the days on the market is a really interesting indicator. It measures, you know, how long listings are sitting before they sell or are delisted. And the longer that a seller has their house on the market, obviously the more pressure they're going to feel to eventually cut the price. And if we switch to the days on the market data point here, you can see again, there's just huge differences. Like in some of these zip codes, homes are sitting on the market for 76 days. In other zip codes, homes are sitting on the market for 17 days. So obviously there will be differences in how likely sellers are to cut the price, how likely they are to accept a lowball offer, depending on this. Now, if we see 45243 in Cincinnati, you can see actually days on the market is always high. The average is 78. It's 76 today. So this actually isn't too much of an indication of distress yet. What you would want to look for is the days on the market surges above the long-term average. Like for instance, in this zip code 45011 up in Hamilton, you can see the days on the market went from 36 days to 55 days. And if we look at the monthly view, yeah, you can see just over the last couple months, the days on the market has spiked. And so that could be an indication potentially price is going down, especially if you pair that with price cuts, seeing that price cuts are above the long-term norm. And how about inventory? Well, inventory is still low. So this is one where 2 out of the 3 metrics are saying prices are down, prices could go down. 1 out of the 3 says prices might still be going up. And of course, there's other factors to consider if you're a home buyer in Ohio in 2024. One, of course, is what's going to happen with mortgage rates. Mortgage rates have gone down to about 6.5%. Some people think that they're going to go down even more in 2024. And of course, we don't really know the direction of mortgage rates, but what's great is if you track this data on inventory and price cuts and days on the market in your city and zip code, you're going to know and see the changes in the market in real time. So I would encourage you guys, go to www.reventure.app and search your city in Ohio or any other state and start educating yourself on what's going on in your neighborhood in terms of home value growth over the last year, in terms of the trends in inventory. That data is free on Reventure app. And if you want to take it to the next level and understand how overvalued home prices are, what the sale inventory deficit is, and even look at information on rental rates and cap rates, sign up for a premium monthly pass membership. The cost is $39 a month. It's billed monthly and you can cancel at any time. It gives you access to all of the data in Reventure app for not only Ohio, but every city and state in America. You can also elect to do the annual pass and get a 15% discount on the monthly rate. I've had a lot of people electing to do the annual pass as of late. So you can lock in access to this data over the next 12 months to guide guide your home buying and investment decision. Good luck on your home investment search in Ohio in 2024, everyone. Head to www.reventure.app right now to check out the data for yourself.